In this presentation, we will fill out the quarterly 941 forms for payroll taxes. For more accounting information and accounting courses, visit our website at accountinginstruction.info. We will do so using our information from the payroll register in Excel. Note we have information so far for the month of August and September, our data starting in August. Therefore, we don't have any first or second quarters. We're in essence starting in the third quarter here. So we have these 2 months of data, and then the fourth quarter, October, November, December, we don't have yet. Note when we talk about quarters, sometimes it's easy to, we can think that there's 4 months in a quarter because it's a quarter, but just remember that quarter is going to be the 12 months divided by 4, which is 3 months. So there's 3 months in each quarter. And our quarter here, of course, is only 2 months because we started in the middle of the third quarter. So what we're going to do is we're going to sum up this data, and we're going to use this data in order to fill out the form 941. To do that, we're going to have to add this up. So I'm going to add up the 2 quarters. I'm going to do that all the way at the bottom down here of our payroll register. We have quarter 3, and then we have the year-to-date totals. So I'm going to put both of those. I'm going to fill both of those sections out. So in F39, we're just going to say equals. I'm going to scroll all the way up top to the total in our first data, which is in F9, and then just say plus. And then I'm going to scroll down just a bit and pick up the total in the next set of data, which is September, in F16, and that's it. That's all we have for the first quarter, and then enter. So there we have that. Now I'm going to do the same thing for the yearly totals down here, and that'll mean that when we use the worksheet in the future, the totals will populate just for us automatically. These probably shouldn't be green here. I'm going to ungreen these. I'm just going to highlight these. It's probably not green on your sheet right now. Right click, but I'll show you what I'm doing, and then paint and make it blue. Okay, so now we're going to do the same thing for the yearly totals, and it'll match right now, but as we move forward, then it'll differ. So, and then once we do that, then I'm just going to copy these formulas over to all of our total datas, and it'll populate for us automatically. So in cell F41, we're going to say equals and scroll all the way to the top, and we're going to point to the F9 and then plus, scroll down just a bit, point to F16 plus, and note the formula is up here. We can see the formula in the formula bar up top. And then we're going to scroll down. Even though there's zeros in October, I'm still going to pick up that number plus, and then here's the totals in the formula bar. Then we're going to pick up this 0 in F30 plus, and then we're going to scroll down just a bit, and we're going to pick up the 0 in F37 and enter. So there's our information. Now we're just going to copy that information and paste it over into our totals on the right, and it should just move over the relative formulas. So I'm going to highlight these cells, right click and copy, and then we'll just populate. I'm just going to highlight all of these cells, or select all of these cells. Right click and paste the first one. And it shouldn't matter here or the formulas, but they're all dollar amounts, so it should be the same. So there we have that. Now we're using, well, it doesn't matter which one we're using. They're both showing the same numbers right now because we only have 3 quarters. But as we populate the worksheet from here, it will then populate the rest of the data. Now we're going to take this data and see what we can fill out here on the 941. So the 941, we're going to have the EIN number first. That's going to be the employer identification number. No matter what type of entity we are, sole proprietor, partnership, corporation, we typically will need, we will need an EIN number to fill out the payroll. And that's going to be separate than our other identification number for the Internal Revenue Service. So we've got the name, the address. We're not going to concentrate on that here. What we do want to make sure we do is check off that we are in the proper quarter, the third quarter, July, August, September. Note, we only have data for August and September because we started operations within October. Okay, so then we're going to go down and start filling out our form down here. Line 1 says, number of employees who receive wages, tips, or other compensation for the pay period, including March, June, in the quarters here. So we're going to pick up the number. We had 4 employees. So we're going to say 4. Okay, then the next one says wages, tips, and other compensation. Now, the wages, tips, and compensation here has to do with the federal income tax wages, tips, and compensation, which will differ from what we will have down here in terms of wages and tips and whatnot for Social Security and Medicare. So those are the 3 taxes that we will be reporting here. These are the federal taxes, the payroll taxes, including FIT, federal income tax, for the employee. Remember, this is the employee's withholding, not our taxes as a corporation that we'll report at the end of the year, or as a business tax. This is the payroll tax. And then we'll have the Social Security and Medicare, both the employee and employer portions. So here we're looking for line 2, what the wages are for the FIT, federal income tax. And that should match, if we add up the 941s to the end of the year, what will be recorded if we sum up all the W-2s, meaning on the W-3. It'll match the total wages for federal income tax there. So we're going to go back to our data then. So from our data, we're going to pick up the total earnings for the quarter, and we're going to reduce it by those things that are going to be reduced from total earnings, which when we calculate the taxes, and those will include the retirement plan, so the 401k in this case, and it would include the group insurance if the group insurance was a Section 125 cafeteria plan. We're going to say this one is not here. So we're just going to reduce the net pay. And note that this should kind of match the type of calculations we had with the withholdings when we withheld on the federal income tax, meaning when we looked at each individual payment and tried to find the FIT tax, we should have taken the payment minus the 401k plan and then looked that information up to tie out to the tables. So in essence, we're looking for that same kind of total number for total wages regarding federal income tax. So if we pull the calculator out here, we're looking for this 96973.5 minus this 5548.4. That'll give us the 91,425 and 10 cents. So we'll go back to our form 941, back to the 941, and we're going to put then the 91, 425 tab to be on this other side because they put the decimal in for us, and 10 cents. So then we got the federal income tax withheld. Now note we can't calculate this again. We can't use this total number and calculate the federal income tax withheld because it's not a flat tax. It's too complicated to do so. All we can do is tell the IRS, hey, this is the wage base that we used, but all of our employees have a different number of exemptions and a different set of circumstances, and therefore we cannot just use that number in order to generate the FIT. So this number, although useful to the IRS, doesn't really indicate anything much at all with regard to what the actual federal income tax withholding could be. All we know is what we actually withheld. So if we go back to our data here, we're going to say that the actual withholdings for the federal income tax is the FIT number, this $17,003.26. So we're going to use that number. We're going to go back to our form, and we're going to put in that 17,003 tab and 26 cents. Now we're at the Social Security. So we got Social Security wages. So we're going to go back to our table. We're going to pick up the Social Security wages. Now in the third quarter, they're the same as total earnings. And that's because, one, nobody's hit the cap, 128,400. In the next quarter, it will, because we have one employee who's a high earner. And note that it could also be different if there was something that could be deducted from the wage base for OASDI and Medicare. It could be different from the total, and that would include a cafeteria plan. So remember, this isn't a cafeteria plan, but if it were, then that would be another instance in which the OASDI and the Medicare would differ from the total earnings. So we're going to pick up this number. So we're going to go back to our form here. And just note before we do that, I'm going to pick up this number, and we already calculated the OASDI here, and we calculated it here, and note the rate, 6.2, 6.2. When we go back, we'll note the difference here. It could be a little confusing. So we're going to go back and put this data in. We're going to say the amount is 96, 973 tab and 50 cents. And note the rate here. It says then to multiply times 0.124. And you might, okay, we'll do that, but what is that? Where does that number come from? 0.12. I haven't seen that number before. And that number, of course, is the 0.062, 6.2% we've been using, times 2, meaning the employer and employee portion. So we're calculating the employer and employee portion at the same time, in other words. So we're going to take that 0.124 times the 96973.5, and we get 12,024.71 about. So we're going to put that here, 12, 024 tab 71 about. Again, you might say, well, I don't see that number there. Well, of course, and you're probably thinking at this point that that's twice what it should be. So here's the 6.2 and the 6.2, and then the amount, then we have the employee portion. I'm holding down control and then highlighting the employer portion, giving us the total portion of 1224.71. So that's where that number comes from. It's a little bit confusing to go back and forth on that. Now, we don't have any tips, thankfully. So we're going to go to the Medicare wages. So Medicare wages, we're going to do the same type of thing. Here's the Medicare wages. We're just going to pull from the OASDI. It'll remain the same unless, of course, once again, we had this cafeteria plan was something that could be deducted from it. There's no cap as there is for the Social Security. Therefore, we're just going to use the total earnings here. So we're going to go back to our form. We're going to fill out that number with the total earnings is the same, 96. It'll differ once we get to the last quarter here, because someone will hit the cap on this one, but not this one. Notice it is different than this number, which is total wages, because this one is reduced by the 401k or the retirement plan. Okay, so once again, we're going to multiply times the 0.029, a number you may not recognize, but that number is the 0.0145, the one we probably have used way too much if you've gone through this whole problem, times 2, and then you got 0.029. So that's where that comes from. It's the employer and employee portion of the rate, times the 96973.5, gives us 2812.23. So we'll put that here, 2,821 tab 23. Now, once again, where does that number come from on our worksheet? Going back to the worksheet here. It comes from the HI here. There's the employee portion and the HI here. I'm holding down control and selecting the other one, and that's the 2,812.23. Okay, let's see what else we have on this exciting form. We are then not having tips, so we're just going to add these two up. This one, line 5E, says add columns 2 from line A, 5A, 5B, 5C, and 5D. So we're just going to add these up. We're going to say 12024.71 plus 2812.23 gives us 14,836.94 total Social Security and Medicare or total FICA taxes. 14,836 tab 94. Okay, so then we have the next line says section notice due tax due on unreported tips. We don't have any there, so we're good. Leave that blank. And then 6 says total tax before adjustments, same number. So actually, we're gonna not the same number. We're gonna add line 3, 5E, and 5F, meaning federal income tax plus the Social Security and Medicare that we've already added up over here. So let's pull the trusty calculator account. Once again, 17,003.26 federal income tax plus the Social Security and Medicare, the FICA taxes, 14,836.94. And that gives us the total taxes at this time, 31,840 and 20 cents. So that's going to go here, 31,840 and 20 cents. Okay, so then the next one says that quarter adjustments, if there's any rounding, we're going to have to put some adjustment there. We could be off by pennies. So if we're off by less than $1, that's typically okay. We're just going to say that's a rounding error, and they're not going to make us write a check for $1, which is nice. We do need to be pretty precise for payroll taxes as compared to other taxes, even income taxes. We need to be pretty much down to the penny as close as possible. Then the total taxes after adjustments is going to be the same, 31,840 and 20 cents. Small business payroll tax credit, we're not going to have anything there. We're going to say total taxes after the credit, 31,840 and 20 cents, same number. Now, it's really important to wrap your mind around the fact that this is going to be the liability amount, and then we're going to compare it to the deposit amount. This form is not here to tell us what to pay and then we write a check necessarily. This form should be an information form only, just like the 1040, except the 1040 doesn't come out to be exact. So our individual tax form 1040 at the end of the year, we should, in a perfect world, already have made the payments, and we're just telling the IRS, here's what we owe, here's the payments we already made. And in a perfect world, it would be zero, and we wouldn't get a tax refund or payment. Now, because the income tax is so complicated, that's impossible, and we usually work it out so that we get a small refund back. But on the payroll taxes, because it is more precise, it is possible to be exact, and we should be exact down to the penny that we can round off. So note, we already made the payment, and we already have the payment. So this is the liability portion. Now we're going to look up the deposit portion. And the story is, hey, IRS, this is what we owe based on the calculation. You can see that we prove it up top, how we get to this number. Now we're going to show you that we have already paid it, hopefully. And so we don't owe you anything. Here, it's been done properly. Here's the evidence of that. So we're going to go back to our form, and we're going to look for the deposits now. So to do that, we're going to go to the GL. So if we scroll down to our journal entries, remember our journal entries had like a journal entry to record the expense for the salaries and wages, and then to record the payroll tax expense, and then we paid the payroll taxes with cash. So here's this last journal entry paying it off. So the payroll happened in August, and then we processed it in September, and we didn't make the payment until the 15th of September. So this payment then, cash, is paying for the OASDI, the HI, the FUTA, the SUTA, the federal income tax that was incurred for August, which we're paying in September. And then we did the same for October. We're paying this cash for the federal income tax, the FICA, the FUTA, and the SUTA, and the federal income tax and the Medicare for September, that we're paying it in October. So in other words, this payment in particular can be confusing because we might say, well, it happened in October, and that's the last quarter. That's October, November, December. That's the last 3 months of the year. That's the last quarter of the year. So where should this payment go? Well, we applied it to the liability which was incurred for the payroll period in September. So really this payment is applied to the liability that was incurred in September. So these are the two payments we're going to have here. Now we have to break this out a little bit more too, because we're dealing only with OASDI, HI, Social Security, Medicare, and FIT. We're not dealing with federal unemployment or state unemployment. And you might say, well, why aren't we dealing with federal unemployment? It's a federal tax, and that's what we're working with, the federal taxes. For some reason, the federal unemployment, we only do yearly on a 941, possibly because it's so much smaller. So the IRS is saying, hey, you don't have to report that on a quarterly basis. We'll only make you report that on a yearly basis because the amount is so much smaller typically. On these, because the amounts are very significant, we want to see them on a quarterly basis. So in that case, what we need to do is pick up this number, I'm holding down control, and this number. That's going to be our 1680.21 for our first payment. And then we made a payment for the next month in the quarter of this, I'm holding down control, and this. So these highlighted areas add up to 31,840.20. If we do that with a calculator, of course, we would just say it's this 6063.1 plus the 1417.98 plus, then I'm picking up this number 8599.13 plus, and then we're picking up this number 5961.61 plus, and then this number 1394.28 plus, and then the FIT, this number 8404.13, and that should be that same 31,840 and 20 cents. So that's what we're going to use. So if we go back to our form here, we calculated it to be 31,840 tab 20 cents. It comes out exactly. Note that these aren't the same number though. This number is our liability and this number is the deposits we made. Okay, so that's basically it. Now the next component we can have is the monthly breakout. So we're going to kind of pretend that we need to break this out on a separate form just to show you the separate form that will basically support this number. So here's the Schedule B for the 941, and this is going to be supporting, once again, that deposit number. So we got the same EIN number we need up top. We need to represent the third quarter that we're working in, and then it's going to break out by month. There's going to be 3 months within the quarter, and we want to have the payments that were applied. Now for us, it's only going to be one payment for that month because we're monthly payers, or our payroll's monthly. But if we were to pay weekly, bi-weekly, or semi-monthly, then we would probably have more than one payment. So what we're going to do is just break the same information out by the actual payments. So in the second month, we've already filled it out here, but if we go back to our data, we're in essence picking up this number that we paid, and that's going to be this plus this. I'm holding down tab and the FIT. That comes out to $16,080.21. If we go back to here, it's going to be $16.80.21, and that's the total. So we only have the one payment, of course. And again, if we had weekly pay periods, we'd have more than one payment in the month. And then if we go back over here, we're going to say that the second payment we made is going to be this plus this and this amount. And also note, of course, that when we actually write this check, we would probably have to write separate payments or make separate payments, whether it be electronic or by check, for FUTA and SUTA. So this journal entry is representing multiple checks that the cash went out. The cash went out probably with multiple different checks here. So in practice, if we were looking up the actual checks that cleared, then we would find separate checks and be breaking out at least FUTA and SUTA to form a separate check. So in any case, this adds up to $15,759.99. If we go back over here, here's the $15,759.99. That's our only payment for the third month. So here it is over here, and if we add those two up, then we're going to say that the second month, 16,080.21, plus the 15,759.99 adds up to the 31,840.20 cents. So scrolling down, that's the 31,840.20 cents. So that supports the number that we put on the deposit side. So in other words, we're telling the IRS, hey, we deposited this much. If you want more detail, here's the actual deposits we made. Here's the month we made them in. You should be able to see that on your side. If you don't see it on your side, let us know and we can then go back through and match this stuff up, because on our side, if this deposit has cleared the bank, then we can be pretty clear that the IRS has deposited it. And then the only question is, well, if they deposited it and they say that they don't have it, then it may not be applied to the proper quarter, meaning we may have put the wrong quarter up here and possibly they applied it to quarter 4 or something like that when we made the payment. And so then all we got to do is hopefully talk to them and say, hey, it's applied to the wrong quarter. Would you apply it to the proper quarter? And everything should work out. So that's a common type of problem. For more accounting information and accounting courses, visit our website at accountinginstruction.info.